Hi, I'm Tom Lydon, editor of ETF Trends here in Washington, D.C. at the Charles Schwab Impact Conference, and I'm with Managing Director of BlackRock, Sue Thompson. Sue, thanks for being with us.
Oh, thanks for inviting me, Tom.
So this is an exciting conference, and I know BlackRock puts a lot of time and effort into researching the advisor market. Specific to the ETF space, you've got some new news and data to share.
We do. So we work with Greenwich Associates, and they do an annual study. And in the past, they've focused on more pensions and institutions. This last year, we asked them to interview and to include RIAs in their study. And what was really fascinating to us is even though RIAs were some of the first to adopt ETFs, there's still a long way to go because the RIAs that were surveyed as part of this said that the vast majority, so over 50%, said that they planned on increasing their usage of ETFs by at least 5%, and then 20% said that they were going to increase their ETF usage by more than 10% in the coming year.
Wow, so even though we've seen these huge flows, data says that it could even increase to a greater amount?
Absolutely, and this will be one of the fastest growing channels from an ETF usage. When you combine that with the fact that the RIA channel is the fastest growing channel in the sort of the retail advisor space,
yes,
I think we're poised for very strong growth.
Well, we've seen huge institutional adoption, but on the advisor world, and I know you keep your finger on the pulse all the time, you're continuing to adopt new products. So, for example, we just passed a 1-year anniversary on your core ETFs, and congratulations on that. And then you have a partnership with Fidelity, which I know just came out recently, and I think the ETF world is excited to see Fidelity in the game, and that's a very strong partnership for you too.
Absolutely. And we're continuing to see certain types of RIAs that had never used ETFs before get very interested in some of the new things that we're doing. So I was just talking yesterday to an investment consultant who has always done all stocks and bonds, never bought a packaged product, and we were talking about the scarcity of supply in the bond market, and he wants to take a look at our iShares bonds. So, it's a great time to be in this business.
Well, in the fixed income side, we're hearing from those that are in the bond business that ETFs actually help improve liquidity of individual bonds. Is that
Absolutely.
right? Yeah.
Absolutely. I mean, they are really, what's changed with asset managers who use ETFs in their portfolio is, before they would use swaps, right? Or they would use, mostly swaps.
Right.
And now what we're increasingly seeing is they're looking at the ETF as just another capital markets instrument that they can use. So, we've seen, and what you see is then the underlying liquidity of the ETF itself just skyrockets. And so, I could show you charts that will just make your eyes water. The hockey stick goes up so fast.
Well, I know you spend a lot of time on education, and that's really what it's all about. So all the years that you've spent on education and what you have on your website really helps. So if advisors are interested and they go to iShares, and I know you do a great job on your blog talking about educational issues that really help advisors help guide their business, right?
We'd like to think so. I mean, the blog has won a number of awards. We really put a lot of time and effort, and other people much more so than the occasional blogging that I do. I would say particularly for people that need education around fixed income ETFs, because that is a little bit of a different beast for a lot of folks. We've got enormous amounts of content on the blog and on the website, especially take a look at some of the stuff that Matt Tucker has done. It's really very clear and easy to understand.
Yeah, that's great.
Yeah.
Sue, thanks for your time today. Really
Thanks so
appreciate
much, Tom.
it. Thank you.